Hello and welcome to the channel of Investment Advisors. As part of Market Vision series, let's analyze and predict how the markets are expected to trade tomorrow. Before that, let's have a quick recap of how the markets performed today. Indian equity markets traded flat yesterday, with benchmark indices showing little movement. Today the markets were shut due to holiday. Nifty closed just 2 points lower at 24,334 levels, while the Sensex slipped 46 points to end at 80,242 levels. Investors remained cautious ahead of news on retaliation by India towards the terrorist attack. Broader markets were mixed today, with some sectors outperforming while others faced selling pressure. Realty sector surged 1.91%, continuing its strong momentum. Pharma and healthcare also saw buying interest, closing at 0.44% higher. IT stocks slipped 0.35%, possibly due to profit booking. Media stocks were weak and were down by 2.2%, while PSU banks took the biggest hit, falling 2.23% on concerns over asset quality. Global markets rallied. US tech leads, whereas Asian markets were mixed. Dow Jones jumped 1% today, S&P 500 rose 1.5%, and Nasdaq soared 2.5% on strong tech earnings as we speak. European markets were mixed. FTSE traded flat, while DAX and CAC had a holiday, closing at previous levels of 0.32% and 0.5% respectively. In Asia, Nikkei climbed 1.13%, while Hang Seng and Shanghai were shut. The last closing was at 0.51 positive and negative 0.23% respectively. Commodities traded range bound. Crude gained, whereas gold and silver dipped. WTI crude rose 1.32% to close at 58.98 per barrel on supply concerns. Gold faced selling pressure at higher levels. It is trading now at 95,730 rupees per 10 gram. Silver as well saw profit booking, closing lower at 98,000 rupees per 1 kg. So now let's deep dive and see the chart as well as open interest to understand how the market is expected to trade tomorrow. So as you could see, so there was some range bound kind of trades that we have been seeing on Nifty indices. It is almost like 1, 2, 3, 4, 5, 6, 7 odd trading sessions where we have not been able to take any decisive moves and then fall up from there on. So now the first crucial resistance is going to be around 24,800 odd levels for us. So since market has been trading in range bound, we have to very closely track once this 24,400 odd levels gets covered on the top side, then from here on we will start seeing upside rally coming in, and it can lead towards 24,800 odd levels because that is the first resistance that we have. On the downside, in case if the retaliation news continues and then if Indian economy or the defense ministry starts attacking on the Pakistan, then we will start seeing Nifty sliding at least 2 to 3%, and in case if Pakistan also at the same time retaliates from their end, then we might see at least 2 to 4% downfall coming in on the major markets. So this level of 24,000 or maybe 24,200 odd has to be cautiously seen. So once we start trading below 24,200 odd levels, then be rest assured that we will start moving down. So as long as 24,400 levels on the higher side is not broken and 24,200 levels on the lower side is not broken, then we might trade in the range bound kind of scenario. So the major support that we are going to get over is at 23,800 odd levels. That would act as a strong support for us. Once that support gets broken, then we might start sliding on the downside. So we have to trade cautiously and see, as long as 23,800 odd levels is sustained. So we will be trading in a range bound kind of scenario, from 23,800 odd levels to 24,400 odd levels. So 600 point range is what we would be trading. So as long as this range is maintained, then it is okay. We will continue in the consolidation for another 1 week. Post the news on the attack on Pakistan, and then subsequent re-attacks coming in from Pakistan on India, that will have a decisive mode to be taken even on Nifty. Now let's look from the perspective of open interest. So on the open interest, as you could see, at all the higher levels we see a sharp increase in the open interest built up. So as you could see at 24,800, which remains as the first crucial resistance for us on the higher side. Second comes at 25,000 odd levels, and then subsequently at 25,200 odd levels, and then lastly at 25,500 odd levels. So at every higher level we see significant open interest positions had been built up. So this suggests very evidently that markets are going to put a lot of pressure at the higher levels. And since alone on Wednesday we had seen good built up of positions that had happened at every 100 points at the higher levels. Now looking at the lower levels, we see immediate support coming in from the put writers at 24,300 odd levels, and then 24,000 levels is where we could see a good support coming in. So the first strong support for us is going to be 24,000 level. So once we see Nifty falling below 24,000 levels, that would be our first trigger. Immediately we have to cut down on our long positions and take the short positions. And also we will closely watch on how the FIIs as well as DIIs along with the proprietary traders have been taking the positions. So their positions will also be helpful for us in terms of defining as to what do they think of the markets. Is there any probability of maybe the retaliation or maybe the attack on the war front is expected to happen? If those are the cases, then these institutions would be the first one to understand and get to know about the news, and then they would start cutting down on their positions. So we have to exactly mirror or follow them based on how they have been taking the positions. So as we were discussing, we do have support at 23,500 odd levels, but at the lower level that support may not be sustained if we start seeing a selling pressure coming in. So we have to remain cautious and trade in the range of 24,000 levels until 25,000 levels, which would be the highest resistance for us. So 24,800 would be the first resistance, and then next would be 25,000 odd levels. So overall, talking from the perspective of PCR, it is one which is positive. On at the money, it is trading at 0.7, which is neutral to bullish. So as we had seen on Wednesday, there was some selling pressure that had come in towards the end of the day. However, at the closing, it was flat, almost kind of doji kind of trade that we had seen. So overall, looking at the world markets which are positive, we might also open positive tomorrow, and those levels would be the decisive levels for us. If it starts trading above 24,400 odd levels, then we can go long, and if it starts trading below 24,200 odd levels, then we have to take short positions. Now let's see from the perspective of Sensex. Sensex also had a doji kind of pattern that was created for the second day, and doji pattern talks a lot about the continuation or the reversal. So in this case, as we could see, we have been trading in a range bound kind of scenario for almost like 1, 2, 3, 4, 5, 6 and 7 trading sessions. So now, since it is almost for a week that we have been in a consolidation mode, this week we might see some range that can be broken. So on the higher level, so this would be the first resistance for us, roughly around 81,000 odd levels. Once we start seeing Sensex crossing above that level, we have to cut down our short positions and be in a wait and watch mode until and unless there is any news on the war front that comes in. If there is no news, then maybe the markets would positively trade and continue on the higher levels. The first resistance for us at the higher level again would be at 82,000 odd levels. So this is going to remain a very crucial level, because if Sensex crosses above that level, then we will not have any resistance. So we might start seeing the movement happening immediately at the higher levels. So we would continue to become very strong once we cross 82,000 odd levels on Sensex. On the lower front, the first support for us is going to be at 80,000 or 79,800 odd levels. Once this level gets broken, then be ready for markets to come for a free downfall, and then this would also be acting as a strong support for us, which was the previous resistance. And since we had broken that and started trading at the higher levels, so 78,800 levels remains crucial for us. We touched here and then these saw the reverse back on the higher levels. So now we have to wait and see if this levels further comes, then we might see this as a selling pressure. We might not get a support here at all. If the news is bad, we might start seeing the Sensex sliding down. So 78,800 is the crucial support on the immediate front for us. And on the higher level, once Sensex crosses 81,000 odd levels, be ready for it to move towards 82,000. Now let's see from the perspective of open interest what we can analyze. So on the open interest, we have resistance at every 500 odd levels on Sensex. However, if you see these resistance are not those significant. So the significant ones are only at 82,000 odd levels and then at 82,500, which suggests that until May 6th expiry, Sensex might not reach towards 82,000 or 82,500 odd levels, because these positions, open interest positions, were only built on 30th of April. So in just one single day, we almost on many of these strikes at every 500 levels, we see 20% to roughly 70% of open interest positions that were built at the higher levels. If the operators or the big institutions were so doubtful about the markets, then they would have started taking positions at the lower levels itself, but that is not the case. In fact, you see some support that is coming in. Roughly around 60% of open interest positions were built alone on Wednesday at 80,000 odd levels. So that means 80,000 is going to remain the immediate first support for us. And then at the lower levels, we have at 79,500 odd, which is not that strong. So the next support is going to be at 79,000 odd levels, and the last support will be at 78,000 levels, which is quite far away. Maybe if there is no news on the war, then we might not even go towards that range. So we have a big range that has created on Sensex from 78,000 odd levels to 82,000 odd levels. Given the fact that we have high wicks, the wicks is trading above 18. So that means there is some uncertainty that we have already been seeing, and because of that, we can expect wild moves to be there. But yes, the immediate support for us is at 80,000 odd levels, and then the first resistance for us should be at 81,000. Once we start moving beyond 81,000, then we might swiftly move towards 82,000 odd levels. So on the PCR front, it is 0.8 for overall and 0.77 for at the money, so which is strong and maybe bullish too. So we have to see how the Sensex is expected to trade tomorrow. From the bank nifty perspective, so we have been seeing that at the higher levels there is a selling pressure that is coming in. So in fact, day before yesterday also, on 29th April, we saw bank nifty moved or inched towards the 52-week high, and then suddenly we saw a selling pressure coming in, and in fact yesterday it gave a big movement. However, towards the end, again there was a lot of selling pressure that came, but there was a recovery. So at the higher level there was selling pressure, at the lower level there was buying, because at the same, since there was a big candle here of positive momentum and great buying, that is when immediately once we came towards that support zones, we saw good buying interest coming in. So now from the perspective of tomorrow's trade, so 54,700 odd levels would be our first support. Once this support gets broken down, then we might start seeing selling pressure coming in on the bank nifty. And similarly for us, the first resistance should be the previous day's high, which is 55,500 odd levels. Once we start trading above this level, then that should be considered positive, and we can look for positive trades for tomorrow. So as long as bank nifty trades within this range of 56,000 odd levels, which was all-time high or 52-week high, which was created recently previous week, until here we will trade in the range bound kind of scenario. Once these two ranges are broken, 54,700 odd levels on the lower side and 56,000 levels on the higher side, then we might swiftly start moving upwards once we cross 56,000 odd levels. So we have to trade cautiously on bank nifty, because we have been seeing range bound kind of moves for almost a week's time. So once either of the ranges at the lower or higher level gets broken down or broken out, then we might start seeing a good buying momentum, as well as selling pressure that would come. So let's talk from the perspective of open interest now. On the open interest, at every 500 levels we see good buying also, as well as good selling as well. So the put writers remain strong at almost 55,000 odd levels, and they have also been building good open interest positions at 55,500 odd positions too. So these two strikes are going to remain crucial in the immediate stage. So once we start trading above 55,500 odd levels, then we will start seeing a good build up of open interest positions even at 56,000 odd levels. So we in fact on Friday saw some on Wednesday saw some open interest positions that were unwind at the higher levels for 55,500 as well as 56,000 odd levels. It was very minimal though, but as you could see, at every 100 points again we see there is some buying momentum that has come in, and which is definitely giving a heated moment for the sellers. So once bank nifty breaks that levels on the higher side and starts trading above 55,500, we immediately will have to cut down on our short positions, since there is a good support that is already there at 53,000, 53,500, 54,000 odd levels. And since Bank Nifty have also been trading at the higher levels, immediately once we see some sell off coming in and Bank Nifty approaching towards the zone, we see buying interest coming in, and then it is pushing Bank Nifty towards the higher levels. So until and unless we do not break on the lower side, there is no point in taking short positions. It is better let the market suggest us where it is headed towards. Once we see a strong closing basis breakdown happening below 54,700 odd levels, then that becomes a confirmation for us to start taking short positions. As long as this zone it starts moving at the higher levels, then it is better to be watchful of the markets, or once it starts crossing above 55,500 odd levels, then we can strongly believe and take positions for the higher levels, and maybe you can take put shorts at the lower levels, or you can take call buys for the higher strikes, or maybe at the money strikes too. So as long as Bank Nifty trades below 54,700 odd levels, it doesn't break those levels, we are okay to continue the positive trades. But once it starts trading beyond 55,500 odd levels, we have to remain cautious with our short positions and cut down immediately, because we might see a swift move or rally coming in post that. So on the PCR front, it is trading at 0.9, which is positive, and at the money it is almost 1, which is again positive. Now let's look from the perspective of FINNIFTY. So FINNIFTY also had been trading negatively. So as you could see, for almost like 1, 2, 3, 4, 5, 6 odd positions, we had been seeing a downfall coming in on the FINNIFTY. So since for us this zone remains crucial, so as long as we do not break on the either side, we might trade in the range bound kind of scenario. Once at the lower level we start trading below 26,000 levels on the closing basis, then that is considered to be negative, and then immediately we will have to start taking short positions on FINNIFTY. And once it starts trading about 26,700 odd levels, then we might start trading on positive basis. So as long as we are in this range bound kind of scenario, then we are okay to move in this zone. So now let's talk from the perspective of open interest. So at 26,000 odd levels, we see a very strong support coming in on FINNIFTY. So despite there have been negative moves on the charts, however, when you look at the open interest positions on FINNIFTY, it is trading at 26,000 odd levels from a very long time, and then this acts as a very strong support too. So as long as this is not broken on the lower side, then we can continue holding with our long positions. Once you decisively see and a strong closing below 26,000 odd levels, that is the day we would have the first trigger, and then markets or FINNIFTY can start trading on the lower side. So from the perspective of long side, if you see, there have been some open interest positions that are built up even at the very high level, that is 26,500 high level on the put writing side. So what that suggests, it is very clearly evident that gradually put writers are have started taking the positions at the higher strikes. So when there is the news on the war subsides, then we might immediately start moving swiftly at the higher levels, and can cross the 52-week high that FINNIFTY had created very recently, and start trading at the higher levels. So now from the perspective of PCR, it is trading overall at 1, and at the money it is trading 1.26. Now, from the perspective of FII and DII movements, so as you could see on index futures, FIIs have been, holding with the short positions. So net open interest positions they have is 10,000. On stock futures, they have been quite positive and bullish from a very long time and are holding 17.7 lakh contracts of open interest on stock futures. On call options, they are long and quite bullish with 1.94 lakh contracts. However, on put side, they have positions of 88,388 long positions. So this suggests that they are expecting mildly correction on markets. So net they are holding 1.05 lakh contracts on the index options long, which is net positive. On proprietary traders or the prop traders, if we call, on index futures they are mildly short with 1600 positions. On stock futures they are mildly long with 2.82 lakh contracts that they are holding. On call options they are bullish with positions of 95,000 odd contracts, and on put options they are again bearish with 34,594 contracts, since they are long on put options. So net proprietary traders are also long with 61,300 odd contracts. So both FIIs are long on markets or index options, and also DIIs are long on the index options. So now let's look from the perspective of clients. So on index futures they are short with 30,000 contracts. On stock futures they are long with 16.17 lakh contracts, which is quite bullish and positive. On call options they are client or retail traders are short by 2.9 lakh contracts, which is too huge. And on put options they are again short by 1.69 lakh contracts. So net retail traders are holding 1.21 lakh contracts on the major indices. So now what this suggests, FIIs are positive, proprietary traders are positive, but retail traders on the other hand are negative. So whenever the institutions are long, that means they have some information, they are the market operators and they can manipulate accordingly, right? So until and unless there is no news on war front, then retailers holding strong short positions might face lot of challenges once the market starts moving on the higher end. So now let's talk from the perspective of DII positions on the cash market. So on the cash market, DIIs have taken 1792 crores of buying positions, whereas on the FII side they have just taken 51 crores of positions. So now on the cash market they have been they have cut down their positions overall, but on the index options and derivatives overall, futures as well as index options, they have been holding long positions. So we have to see how the markets the next week is expected to perform overall, because we have a weekend and there could be some news. But tomorrow's trading close would be very much important, because in case if FIIs and proprietary traders take huge position tomorrow, then there is nothing that is expected to happen over the weekend from the war perspective. So we might see some bullishness getting built up, and then accordingly the next week the markets can trade at the higher levels. So overall we have to be cautious only on the news front, because if we hear any attack or war kind of scenario coming in, then we might swiftly start trading at the lower levels. But if there is no news that comes in over the weekend too, then next week for sure we might trade positively. But yes, tomorrow's trading is going to remain crucial in terms of understanding that how the institutions will be placed in terms of taking their positions, given the fact that we have a weekend. So overall, if we have to summarize, then markets remained range bound and selective sectoral movements had been seen. Global cues were positive. US markets have traded quite well, but yes, Indian investors stayed cautious. And then lastly, we have to keep an eye on the upcoming news on the war front, and also the corporate earnings for further direction on the markets. So that's all for today, as part of market wrap up. So stay tuned for more updates, and don't forget to like and subscribe to our channel. So see you tomorrow.